Well, we'll get started. My name is Mark Lyons. I'm the Director of Sales here at SMS Financial Solutions for the Life Department. And I have my very good friend David Gokie from Assurity here today. Um, David's going to be discussing the topic of maximizing every client conversation with solutions others overlook. Well, that's quite a mouthful for a title. And so, we're very anxious to hear what David has to say here today. I think everybody that's on the call is going to really get a lot out of it. We're taking a little bit different approach to this webinar. It's just not about basic information, but it's really about trying to find solutions for clients with Assurity's unique product mix. Um, they have a lot of stuff, and I know Dave's not going to talk about all the stuff that they have, but he is going to hit on a little bit of what they do offer, and then get into the meat of the presentation. As a reminder, for those of you that have been on the call before, um, or for those of you that haven't joined us before, uh, you can ask questions as we go through the presentation. Just be sure to use the Q&A at the bottom of the screen. Do not use the chat feature. That will not be monitored. But you're free to ask questions at any time during the conversation, and then we'll try to answer them as best as we can. So, um, if you don't know David, he's a regional vice president at Assurity. He's been in the industry for a long time, and was an advisor himself originally. He did work for some other carriers in the interim, but we're very, very lucky to have him. He's one of those folks that really does all that he can to help our business get through smoothly. And so I encourage you to listen to what he has to say, and hopefully you'll find a lot of opportunities to do business with Assurity. So, David, welcome.
Thank you. I'm really excited to be here. I really enjoyed that introduction. There's not a lot of groups that I work with that I would consider a friend, and I do consider you a friend, Mark. And so
Okay.
I very much enjoy the partnership with SMS, and I'm sure pretty much everyone on here today would give that thought the thumbs up as well and agree with that sentiment. So, um,
Thank you.
yeah, Mark, we're obviously covering a very unique set of topics today, and figuring out how the heck to title this webinar was probably one of the most difficult parts of putting this all together. We're covering topics like disability insurance, foreign resident opportunities, juvenile whole life, and I felt like in kind of going through all those opportunities, one, they're they are solutions for problems that are often overlooked. And when looking at all those solutions kind of combined, there really isn't a client that we can't look at helping with these solutions. So, hence how the title slide came to be. So before before I jump into what we're talking about today, a couple things I wanted to talk about. But first, I'll say this, and I most of the time I remember to try and speak to this because I've been in your shoes, as Mark had said. But there's statistics. 50% of what I discuss today will be forgot within the first hour. 70% will be lost tomorrow, and it's like 90 some plus percent will be forgot a week from today. So, what I encourage you to do, if you are at all like myself, I am an atrocious multitasker. I used to think I was good. I am not, no longer. I encourage you to think of a client within your existing block of business, within that potential client list that you've got, um, or even yourself, right? Even yourself. So I would encourage you to kind of put that thought process in mind with what we're going through today. So, yeah, Mark said it. We're kind of a Swiss Army knife of products there on the left side of the screen. We're obviously not going through all of our product suite today. With all the different products, because those are product categories, I think we have like 18 different products. And I would encourage you to make sure that you have us as an arrow in your quiver, because inevitably there are solutions that we're offering that your clients are looking for that they may not even know that you offer to them. So, um, I encourage you to give that a look. And again, we'll kind of dive into that just after this. I'm not going to spend much time. I'll spend 30 seconds on why Assurity. I think that first element, being a mutual company, we are owned by and accountable to the people we insure. So by design, we're putting our customers first. So I think that's an important factor. We've been around for over 135 years, and so I very much applaud any and all mutual companies. I think that's an important element of this industry. So, kind of going into our topics today, why should I sell disability insurance? And so I'm gonna speak to a lot the why, and when discussing the disability, and not so much the what, because the what, we're going to go through the what briefly, the nuts and bolts of our products, but that's exactly why you have the SMS team. Some of these topics, if you don't broach them often, maybe it's been a year since you've done DI, maybe it's been 5 years, maybe you've never done it before. The need is still there for your clients. And again, that's why you have the SMS team, right? So why should I sell disability insurance? I'm going to ask this question, and I want you to ask yourself this question. And the answer might be varying depending upon where you're at in your career. As Mark had said, I've only been as a wholesaler for a decade now, and prior to that, a financial advisor myself. But what if your last paycheck was your last paycheck? Now I'm going to ask that again because hypotheticals are difficult, but I really want you to think about this. What if your last paycheck was in fact the last paycheck you ever made? What does your financial situation look like? Because I know for me, I would be tough. I don't have that nest egg to lean on, and most clients don't either. And so we're in that world of working with our clients' monies, and pretty much everything that we speak and work with them on involves that base layer, that income slash disability insurance layer. If we don't have that income, there is no paying for the life insurance, the property insurance, the maybe it's the Medicare solutions, whatever it might be. Retirement maybe looks a little bit different. Maybe the home. There's a scary statistic when you look at foreclosures on homes in the United States. Almost half of all foreclosures on conventional mortgages in the United States are due to a disability. A lot of people think they think death, and don't get me wrong, we're going to talk about life insurance here in a moment, but I'm a huge advocate for disability insurance. One of the things that I often mention, I've only been in an Assurity for the last 5 years. The very first insurance product I ever sold was an Assurity disability product. I very, very much encourage you to have that conversation. It is something that is often not spoken about enough. And again, I'm hitting on the why behind disability insurance. In this game of life, death comes for us all. Inevitably, we are all going to die. That being said, at those younger ages, we are much more likely to get disabled than to pass away. I've shared with Mark. Mark knows my story well. I won't go into too many of the details, but I've been on a disability claim. When going on a disability claim, there's a reason you're on it. You want to concentrate on trying to get better, right? Mine was due to a cancer, and I was out of work for multiple months. Having that income come in for me was huge because it allowed me to concentrate on what was more important, which was getting better and being there for my family as best I could.
And this
And
might be a unique webinar in the fact that we're batting 100% of people that have been out on a DI claim due to a medical issue. So
there you go, Mark. There you go. Now, here's another interesting kind of take, and this is kind of one of my last slides on the why. And there's a lot. My background, as Mark said, was as a financial advisor, but prior to that, I was a finance major. I love numbers. I know a lot of people don't, so bear with me on this slide. So I love this for a few reasons because if you're not bringing this up to your clients, I would very much encourage you to do it. So if we look at a client, you can see age is on the y-axis, income's on the x-axis there, and this assumes you're going to get a 5% raise every single year, which maybe is a poor assumption. Maybe you make more, maybe you make less. But if I focus in on, let's say, a 30-year-old making $75,000 that's going to retire at age 65, does that 30-year-old know that they're going to make $6.7 million over their lifetime? Do they know that? Do you know that when you're working with that 30-year-old? And you go to that 30-year-old and you say, hey, what is your biggest asset? What is something that we want to protect? Obviously, it's their life. We talk about life insurance, implement life insurance solutions there. But potentially more important is their income. Disability insurance it really probably should be called income protection, right? Or paycheck insurance, many names. We don't call life insurance death insurance. So it is a good reminder that we need to be protecting that income. And, even if we're looking at, let's say, a 55-year-old that's making 75 grand, that's still almost $1 million that they're going to be making over the next 10 years before they retire. Is that worthy of protecting? I would say probably yes. So I think looking at this analysis, this isn't even a detailed financial report by any means, but this is just simple math looking at this and saying, look, there's 6.7 million or 2 million or a million or whatever that number is. It's probably worth protecting. Let's have a conversation around that. So I'm a big advocate of that. Yep. So what do we have for those solutions? Well, I wholeheartedly believe, and I think it's a pretty objective statement, that at Assurity, we have the most comprehensive suite of individual DI products in the marketplace. Now, again, as I had mentioned earlier, this is not a college, senior year 440, disability 440. This is DI 101 as far as the nuts and bolts of the products I'm going to go through. And I'm going to go through them quickly. Again, lean on the SMS team. But I wanted to give you some of the details. Now, before I dive into that, I will say there's underwriting with disability insurance. And underwriting is, yes, both for your health, but we also look at your occupation. The riskier the occupation, the higher the premium is going to be. Conversely, the safer the occupation. Mark and I don't have a lot of risks in what we do. We could do our job with a broken leg. It's going to be less expensive. So, do keep that in mind. So let's start with this, our short-term DI. You'll notice up in the top right, accident or sickness, off the job, on the job, doesn't matter. You get disabled due to an accident or a sickness, short-term DI, it's shorter benefit periods, shorter elimination periods. For those of you who leverage the SMS team for long-term care, elimination is that waiting period. So think of a 0-day elimination period. I wait 0 days. I get paid out on a weekly basis for 3 months, for 6 months, 26 weeks, for those of you who are bad at math, 1 year or 2 year, and then it stops. Now, if we need a longer benefit period than that, we can always do that. We can utilize our long-term DI product, and I'll reference that here in just a second. Now, on the short-term DI, we also have accident only, meaning this is only going to pay out in the event of an accident. Why would I ever want this product? There's very little underwriting, and the premiums are significantly less. Now, I did mean to mention both the accident only and sickness and accident product. This is not a maternity product. I'll say that again. This is when it comes to Assurity short-term DI, it is not a maternity solution. So we don't have that as the solution. Think, my story. When I got disabled due to my cancer, my short-term DI was able to pay out on a weekly basis, and it was so very helpful. So that's our short-term DI product. I'm going to go into a little bit of a niche product here, and then I'm not going to go through all of our DI products, but then I'll land on our flagship product. So this is a graded benefit DI product. Think for those clients who are unhealthy. So you have a client who is a type 1 diabetic. If you go to the insurance industry right now and say, hey, I have a physician, and this is a buddy of mine actually that I'm thinking of, a physician that's a type 1 diabetic, where can I get coverage? You're going to be hard pressed to find anyone to have a solution for that physician outside of Assurity, maybe Lloyd's of London. And so, if you have a client who's got cancer, if you have a client who's had a heart attack, if you have a client who has had any of these items on the screen, now, if you start stacking these, we're going to still have that potential for a decline, but the ability to potentially offer coverage where others can't is something that we really pride ourselves on. Our DI underwriters, one of the best actually came from the Mutual of Omaha family, and so he's he's a great underwriter. We love our DI underwriters, and so they'll work with you in massage cases to work on getting an offer where we can. So I love that. Now here's the final product that I was going to speak about, and I'll dive into this a little bit more nuts and bolts, and we'll move on to another topic here in a second. But this is our new long-term DI product. This is an amazing product. I love it. There's a lot to be spoken about. Again, the SMS team can dive into more and more about it, but there's a reason why our DI sales are on track to about double this year, and this is one of the main reasons why. You can see all the nuts and bolts. I'm not one to read off my slides, so hopefully you're looking at the screen here. But one of the things that we introduced with this long-term DI product is we introduced that 5A and 6A occupation class. As I had mentioned, we underwrite for health, but also occupation. A 6A is going to be one of the cheaper premiums. That 1A, more expensive, right? That roofer is going to be a little bit more expensive than that accountant or that architect. Additionally, we took the opportunity, skipped a slide. We took the opportunity to improve upon our occupation classes. And so, that healthcare section, nurses, we've seen our nurse with the introduction of this product and our reorganization of our occupation classes. If you looked at DI with us in the past, we might be in some cells 5% cheaper, 10% cheaper. For that nurse, we're maybe 30% cheaper. More affordable coverage for that client that is in need of a robust DI solution that we can offer for them. I know there's oftentimes, for those of you who are novices in the DI world, there's complication. Do I want that true ONOC? Do I want that ONOC and not working? We have all of those that you need. And again, as I've said for the 5th time now, the SMS team is fantastic. And should something very, very complex, that's when they get us involved, and we're more than willing to help out one of our best partners in SMS. I'll kind of finish with this element, and then skip on to our kind of last element here. But we used to only cover through age 60. We are realizing clients are working longer. Then maybe they're working multiple jobs. So we're offering 2 age 70 benefit periods. We're covering through age 64. We'll underwrite that client who is working at Starbucks for 15 hours and an Uber driver for 20 hours. We're offering a lot of flexibility with this product that wasn't previously there. And then an abundance of riders. You can almost see it's running off the screen there, the amount of riders. We can really customize this. So again, please leverage the SMS team. But I will also say this: if you're curious about more DI insights, info.assurity.com/sell more DI. Every single, maybe every single product, at least for the short-term and long-term DI, we have a seller's guide. Hey, definitions to know, insights to know, statistics to know, some occupation playbooks. Whether it's an accountant, architect, we've got, I want to say maybe 9 to 12 different occupation playbooks. Hey, look, if you work with a lot of accountants or a lot of nurses, these are the typical incomes that we see. These are the riders that we see being selected the most. More and more details. So please leverage that site. The last thought, which is a good transition, and Mark, please interject if you have any questions yourself as of right now. But the last thought as I transition to another topic is, with the introduction of this new long-term DI product, we are now willing to accept certain visas just with the long-term DI product. Now, if it's not on the screen, we won't insure it. But if it is on the screen, which many of the top visas are, I would encourage you to, again, have that conversation. We'd love to look at insuring those clients. So yeah.
let me just recap this first conversation. Number one, Assurity is a mutual company, and I'm a firm believer in mutual companies because they really do have to look out for the policyholders, and not necessarily the shareholders. Um, you really have a full product portfolio, lots of different stuff. We're emphasizing the DI here, and focusing on this concept of, what if your paycheck was the last paycheck that you were ever going to receive? And you highlighted the idea that, you know, most foreclosures, particularly of younger people, are due to are are due to some sort of disability, whether it's
Exactly.
accident or sickness. And then you're really focusing on this idea of paycheck insurance protection, which I thought was very good. And of course, anybody that's does any kind of planning realizes that disability income insurance is really one of the most important pieces of a complete plan. Full comprehensive DI product portfolio, um, specialty product, which is graded benefit, which is an impaired risk type DI product, in addition to the short-term DI and the business overhead expense and the new long-term disability plan. Not a maternity solution,
Right.
but that long-term DI plan uh, has not only improved the occupation classes, particularly for office jobs and healthcare workers, but expanded the type of visas that would qualify.
Yep.
And all this
Exactly.
information is in one place at assurity.com/sell more DI.
Yep.
How's
Exactly.
that?
That's a great recap. You were paying attention. I appreciate
Okay.
it. No, you made me. I know not everyone on here cares is a financial advisor, but oftentimes I get some pushback from those producers that are. And again, I was myself, and I always remind those producers, DI can often help protect your assets under management.
Oh,
Because
absolutely.
what happens when your clients get disabled? They start accessing their retirement accounts because they don't have the necessary insurance in place. So I always kind of like to add that little twist on to it was a good reminder. So
All
um,
right.
yeah, so it's a nice transition. We're a little bit limited in our DI offering, obviously just only offering the visas, but one of the things that we're significantly growing in is our foreign resident program. And look, we know in the United States this is a huge opportunity. The previous carrier that I was with, and a lot of other carriers will focus in on those really high net worth clients, maybe those clients that are quite literally living in another country. That is not what Assurity is focusing on. That is, our mission statement is helping people through difficult times. That client that's worth $10 million not having life insurance, yeah, maybe they incur a small difficult time, but we're really looking at those clients. If they do not have life insurance, their life gets turned upside down, right? 14% of the US population was not born in the United States, 14%. And so obviously that includes green cards. Green cards, absolutely no problem. We're good to go there. But it does include those clients that, maybe you're on a visa, maybe only have an ITIN, individual tax ID number. Maybe they only have a social security number. But that market is severely underserved. Those clients still have the same needs that Mark and I and everyone down my block has here in Omaha, Nebraska. And so who is eligible with our program? Well, we need you living inside the United States first and foremost. We're not looking at those clients living elsewhere. We need you living in the US. So ours is essentially broken into three categories, as you can see on the screen. I'm not going to spend too much on the first, Canadian citizens. Believe it or not, there are a lot of carriers that will not cover Canadian citizens. So if that is, if you have those clients, that. We're good to go there with a few elements. Clients with a valid visa. We are looking for clients, whether it be in the visa or that third category, that are looking to stay here. So if you are that that client that has a short-term visa that is maybe it's obviously visas have an expiration, but if that visa is very clearly going to make you go back to wherever your home country is, all right, we're going to have some trepidation in insuring that client. But that third category is where we're seeing tremendous success. When we introduced this program about a year and a half ago, we actually required the client to live in the US for 5 years. The business has been good. The persistency has been good. We've been loving this business. We actually drove it all the way down to just 1 year. So if you have a client who is not a US citizen, they do not have a visa, they do not have a green card, but they're here and they have an individual tax ID number or a social security number, we're willing to insure those clients. We want those clients. We've had some really good business with those clients. So now, who isn't eligible? If you've got some kind of essentially celebrity status for one reason or another, and you can again see that political reasons, public figures, journalists, again, we're going to have some concerns there. We're not going to insure those types of clients. But as far as our products and what we're willing to, it's essentially our life product suite. So our term life, our whole life, our single premium whole life, our universal life, and our accident insurance. Now, accident, that's not life insurance, but we are seeing tremendous success there. It's kind of that health product, that Aflac-esque type product. So great opportunities to be had there. We do cut it off at age 70. We do include juveniles. We're about ready to talk about that juvenile opportunity here in just a moment. And we do limit some riders, but being able to offer that preferred or that preferred plus on that client that only has an I-10, we're actually seeing a lot of preferred ratings, because we do see those clients. A lot of these clients are not aware of the fact that they have a solution out there. Now, the process is,
David,
yeah, yeah.
if I could ask you just to back up one more slide.
This one, who is eligible?
Yes. So Canadian citizens
Yes.
in the U.S. on a passport or you own property, non-U.S. citizens with a valid visa living or one or more consecutive years in the country, and then you have stable employment with one of those visas, and that's a lot of visas.
Yep.
And then a non-U.S. citizen with a green card or a visa, again, living in the U.S. for 1 year or more, and then you have either a social security number or an I-10 number, or have a
Exactly.
valid form of government issued ID. So
Yep.
that's
Yep.
that encompasses a lot of folks.
It
Okay,
does.
I just wanted to hit on that one more time.
Yep, yep. And that this slide is the meat and potatoes of this topic. So it's a
Because
great.
I would guess that everybody on this call knows somebody
Yep.
that's in one of these categories.
Well, and I would also say this, you're spot on with that. Now, if you're trying to really, become a center of influence in this and capitalize on this opportunity, you have to have just that, a center of influence that or really be involved in that community. You have to have the trust of that community, because there's maybe a reason for not trusting everyone in that community. So I would, if you have no ties to that community, whatever community that is, whether we've seen a lot from South America, Central America, we've seen a lot of Europeans, we've seen a lot of Indians, some Chinese. Really, no matter where you're from, you have to have that involvement in that community for them to trust, to want to work with you. And it's tough to get into that if you're not already in that. So I would offer that advice for those of you who are in those communities. This is such a wonderful opportunity, because again, we are here to help. At least the reason I got into this business, and probably much like many of you here on the call, I got into this business to help clients. Yes, I am also here to make money, and that's but I can do both, right? I can help my clients and make money at the same time. And what better way to help those underserved marketplaces like the foreign resident space? So, yep. So how it works, again, I would lean on the SMS team to speak to that. I wanted to give you a couple tips. So here's a sales idea. I'm almost, and again, please read it. This is making use of our essentially famous returner premium rider that we allow for this. But small business owners and new home purchasers, much like U.S. citizens, they need life insurance coverage. You start a business, all right. You maybe have loans on that with that business. You buy a home, inevitably most people are having loans on, and so they need that life insurance coverage. They want to be able to keep their family in those homes. These clients are often unaware of the opportunity to create the peace of mind that, I have, in that sense of having my life insurance coverage for the the mortgage that I have on my home. This is, you can see on this example, she's an accountant, and I love partner with accountants. We're seeing our agents partner with accountants because the accountants are the ones filing the taxes and seeing the I-10 and only the SSN. They see that they're not U.S. citizens. These are the client, leverage those relationships, build those partnerships, build those centers of influences. Those clients still need the protection that we still need today as well. Now, one of the most asked questions I get with this, okay, that's great, but I need these materials in the native languages. Okay, we have it in Spanish, Chinese, Korean, Vietnamese. Now, the app itself is still in English. That's for regulatory reasons, but we have supporting materials that is in language. So make use of that. Our agent site, our agent portal, again, the SMS team can point you to that, but there's a lot you can access without even having to be logged in. So I'm going to reference a website here in just a second, but it talks about the program requirements in more details. It talks about our foreign national questionnaire, just a quick questionnaire that the client fills out with in accompaniment with the application, a checklist with the app. This is approved in all states that we have our products available in, our life products, except for New York. We don't have a product in New York, so we're good to go there. And this is that site that I was referencing. So please make use of this. Again, you are either in this opportunity space or you're not, but I almost guarantee you at least have one client that is working and trusting with you, that you could you could leverage this solution for them. So with that, I'm going to transition to my next, my last kind of detailed solution. But Mark, I'll throw it back to you. Any thoughts so far? Questions?
I mean, this is kind of one of those areas that I truly think that, both SMS and Assurity, um, there's a huge opportunity there. And we're starting to take advantage of it, and I'd like to dive into it more. The with the materials in the languages, and I understand, why sometimes the application is in English, for the regulatory reasons and the legal reasons. But just the fact that you can have those marketing pieces in those specific languages, that makes a lot of difference. I mean, it's huge, and not everybody has that, particularly if they're offering the types of products that Assurity's offering.
Yep. Yep. Well, we obviously talked about the DI space, talked about the foreign resident solutions. So again, let's move on to kind of another unique solution. Why life insurance coverage on juveniles? As I had said a couple times now, when I started in this space, it's as a financial advisor, I used to actually very much not like juvenile life solutions. I don't know why. I don't know where that stemmed from. I think it stemmed from just seeing other agents push it and me not necessarily fully understanding the importance of it. I had another kind of personal story. 2 weeks ago, a little over 2 weeks ago, I was attending the funeral of my cousin's 15-year-old, and it was obviously very difficult. Type 1 diabetic, didn't wake up the next morning. It was in a small community here in Nebraska, and he was a kid that you really just put a smile on people's faces. 15, and it was a beautiful funeral, and my cousin had life insurance on his son, but I think more importantly, much like DI, it allowed him and the whole family to really focus in on Charlie, because he was a truly special kid, and to have the ability to invite so many people and provide food and encourage anyone and everyone to come in the community come. So I mean, I don't necessarily want to make that this about him, but there are countless stories like that where the last thing you want to be able to bury your kids the right way, and to focus in on who they are and not have to worry about the finances, the financial problems that come with it. So that's one element to this, and I wanted to kind of start with kind of fresh in my mind. Um, so why juvenile life? Well, again, raise my hand on the first bullet points. You lose your insurability. Life insurance is not like there's another investment out there you can go and, there's plenty of well, I can invest in this and this. You lose that, that capability of buying insurance, that life insurance, and there's simply just no other alternative. And so the locking in of coverage on your child, I mean, could ultimately give them peace of mind for the day that rolls around in the future when they have kids and are worried about protecting them. So, I encourage at least having a conversation around that.
Yeah,
You know,
and I would make one point on that too. I think a lot of people would say, well, you don't need to lock them in when they're juveniles, when they're in their 20s, the likelihood of them still being insurable is very high, and they can get life insurance then. But I guess what I've seen is the problem that most young adults in their 20s don't go get life insurance. And they're really hard to convince that they need life insurance until maybe they start having they get married and start having a family, and then they realize that they need it. And by that point, they're beyond, um, or they're getting into a riskier time for becoming uninsurable. So you're just heading off a potential problem by purchasing life insurance on children. Um, because they're not going to necessarily be responsible enough to do it on their own when they become young adults. I
yeah,
mean, that's just a fact of the matter.
yeah, no, it's an excellent point. Um, yeah, and so potential loss of insurability, cost of waiting, right? We all know this. The earlier you purchase life insurance, the less it costs. So that small element of urgency, it's not imperative, but and again, I used to, when I speak with my clients, and even if it's, this isn't even juvenile life, but even if you are working with those 20-year-olds, if they're not married, if they don't have any kids, if they don't have the house, they've got a positive net worth, they have enough to bury themselves, it's still worth mentioning that conversation. Maybe someday they will have kids. What if they lose that insurability? And so, even if it's not necessarily even juveniles we're speaking to, that loss of insurability is, again, having lost mine in my mid to late 20s. I approach that conversation a little bit differently now, if you will. Um, cost of waiting, so peace of mind. It's as I mentioned, you encounter someone who's lost a child. Um, it's a difficult conversation. We not having to worry about the financial impact of that, I think is can bring just so much better concentration on what's really important. Show that you care. I think that if you approach this the right way, it can be seen as a way of showing that you truly care versus, hey, this guy's just trying to sell me something. Show them that you care. A lot of times this idea hasn't even necessarily crossed their mind. Obviously, they become stickier clients the more that you do with them. And this last bullet point is obviously a joke. Kids need more toys. I've got an 11, a 9, and a 7-year-old. I do not need any more toys, whether that be from my brothers, sisters, parents, in-laws, whoever it might be. And any of us with kids around that age knows that full well as well. So keep that in mind too. So we introduced last year a couple new life products. Our Whole Life Protect Plus and our Whole Life Perform Plus. And so the Protect Plus focuses on inexpensive premiums with a large death benefit. Perform Plus leverages cash value growth while still obviously having that death benefit protection. Now, the beauty with this product is we have living benefits, both terminal, obviously, chronic, obviously, but also critical illness built into this product. And those critical illnesses that are built in that we can leverage should something happen is they're very robust in the number that we have. And in fact, and I shared this with Mark not too long ago, but it was kind of a nice surprise when Investopedia dubbed us the best living benefits story in the whole life space. So, it was something we assumed that you had to pay for. So it was nice to be recognized in that regard. Now, one of the things that Mark mentioned, a lot of clients don't leverage life insurance in their 20s. They forget or push it off, other things get in the way, and then all of a sudden, all right, we lose our insurability. One of my favorite riders is leveraging our guaranteed insurability rider. The ability to buying the ability to buy more life insurance coverage as you get older. It's huge. You're not really paying it's such an inexpensive premium, locking in the ability to buy more and more in the future. Obviously, if we're buying it on ourselves, we can always do a children's term rider. You're not buying a children's term rider on a juvenile policy. The last highlight, and these highlights are bold, are very, very faint, but the payer benefit rider. All of us are aware of a waiver of premium. If I'm buying a policy on myself, if I can't do my job, if I get disabled, I don't have to wait. I don't have to pay premiums anymore. The payer benefit rider does the same thing, but for the payer, because obviously a 5-year-old is not paying for their own policy. So I very much encourage utilizing that payer benefit rider, because should that payer die or get disabled, we're going to waive the premiums for that juvenile policy. So it's a good rider to consider, and a rider that not a lot of other carriers have. So this is the nuts and bolts of the product, and these two products, whether it's leveraging for death benefit or cash value, can be utilized outside of the juvenile life story as well. But I wanted to speak to why us with this solution, which is underwriting. When it comes to our juvenile life solution for these two products, it is a different app, and the app only has 3 health questions. And we are also, unless you're answering negatively to those 3 health questions, we're not pulling MIB. We're obviously not pulling MVR because our clients aren't driving. Well, maybe if you're working with a 15, 14, I was driving at 14. I think maybe a lot of us were 14, 15, 16, whatever it might be. Those are still juveniles. We're not doing script checks unless you're answering adversely to some one of these questions, which in turn means about 91% of the time, we're seeing an auto approval on our juvenile e-apps. It's a very quick process. Now, I will, speaking to, and I know I'm throwing up random numbers here on the screen. I tend to like to do this. Please, anyways, bear with me. But 100 years. So now, why do I say that? So in 2025, believe it or not, so I had a lunch with my head of claims here in January. And I think, Mark, I think I told you this story potentially, but in 2025, we paid out a policy. We paid out a death claim on a policy that was issued in 1940. Think about that. That was 85 years ago. It was amid the height of World War II, obviously pre-internet, pre-atomic bomb. Somehow, I love this story for a myriad of reasons. Somehow, the client kept this policy going. We kept this policy going. 85 years of paying, of paying those premiums, and we were there to pay that death claim. Juvenile life policy is something that we do a tremendous with. Undoubtedly, we have a policy today that we're going to have to pay the death claim out in 100 years. Mark mentioned the importance of working with mutual companies. Going back to that, it is such an important fact that we put our policyholders first. We might have some off years, and we're okay with stomaching those off years as far as our ROI internally, or our bottom line. If we only grow at 3% instead of 7%, we're okay with that. Now, in the long run, we need to have continued growth, and we're always looking at that hindsight or into the future. But balancing the now with the future is something that mutual companies do a so much better job of than some of our stock competitors. So the idea of us paying a policy in 2126, this seems like a made-up year in a way, doesn't it? So,
yeah. It does. It does.
Yeah. So I like to put that into perspective. So I'm going to finish out with a few juvenile life designs, I believe, and then open it up to questions. So bear with me for another 5-ish minutes. But but I wanted to show the affordability. So Donna and Dale, and I screenshot this from one of our marketing pieces. Donna and Dale wanted to put a policy on their three grandkids. That's $415 a year covering all three grandkids. And I know these numbers are small, but with a guaranteed insurability rider, $415 a year. That's so insignificantly inexpensive. So let's say they said, you know what, we want something a little bit more bold or strong. Now, I'll go back to go before going back to this. As long as we're under that $100,000 threshold, Donna and Dale do not have to involve their kids in this. Their kids do not have to sign if they're buying it on their grandkids. So grandparents can sign completely without involving the kids and doing a policy on their grandkids as long as we're at $100,000 or less, which is something that we introduced with this product that we're really excited about. Now, once we go over that 100,000, we're going to have to involve the mom and dad in this. But any amount under 300,000, we're still not asking mom and dad how much life insurance that they have. So on this policy, all we do need mom and dad's signature, but $733 a year to put in $250,000 death benefit. Again, you are leveraging so much money. There's so much, there's so much money being leveraged here to create $250,000 of death benefit.
That's incredibly strong. And I'm glad you brought up the idea of grandparents taking
Yep.
it on grandchildren. I think I always thought that was a great idea. I mean, grandparents like to do that
Yep.
sort of thing,
They,
and we've seen it a lot over the years. Um, this policy that you had on the slide before, and that one, go back a slide.
okay. Yep.
And that would be a policy that would be eligible for the pay or benefit rider.
So great question. So that one would not be when we have grandparents, the payer benefit rider. If once we eclipse a certain age, that payer benefit rider is something that we would not be able to make use of. So it's really got to be the parents that are paying when we're making use of that payer benefit rider. So that's a great question.
All right.
Yep. Yep. So I'm gonna skip ahead a couple slides for time. I love this story. So speaking with that grandparents idea, baby boomers own 52% of the country's net worth. That's $85 trillion. Obviously, opportunities are created from that. Please leverage that as best you can in other solutions. But one of those is having a conversation about protecting their family. When family is typically the biggest why when working with our clients. And I think I've shared this statistic with you, Mark, but I'll ask it again, even though I know I've asked you in the past, because I'm curious if maybe it's changed. But there's a scary statistic, and it's that a majority of Americans cannot even name half of their great grandparents' first names. Every single one of us have 8 great grandparents. So I'm curious, Mark, if this has changed. Can you name just the first name of 4 or more of your great grandparents?
Um,
And while
I
you're
can I
thinking,
can I can I can name four.
okay, you can name 4. So now that I've read this, it's changed. But initially, when I was asked for the first time, I could only name 3. 2 of them for good reasons, one of them for the wrong reasons. Not a great person necessarily. Of course, I remember that one. But I'll couple that with this thought of it's said that you die twice. You die when you die, and the second time you die is when your name is said for the very last time. And so, for a majority of us, our name will be said for the very last time when our grandkids pass away. And that's something kind of difficult to kind of wrap your head around a little bit. And so one way of maybe getting around that a little bit and kind of tugging at some heartstrings is what if you bought a life insurance policy on your grandkid, and when they pass away and they pass that on to their grandkids, I can almost guarantee you your name will not be forgotten for multiple generations, or your names, if you will, right? Grandma and grandpa, all right, or whatever you go by or they go by. And so here's kind of one kind of last thought. I had mentioned single premium whole life, I believe a couple times. We can leverage our single premium whole life solution as well. Now, for those of you who know the tax world quite well, there's a reason I have a $19,000 number up there, that gift tax exclusion. Anyone can give anyone 19 grand for any reason without have any sort of tax implication. $19,000 on a 5-year-old is going to buy $250,000 of death benefit, plus cash value if we need access to. Now, one of the things I had mentioned earlier, cost of waiting, go back a slide again. 19,000 buys 250 on a 5-year-old. If we bought it on a 1-year-old, it's $290,000. Don't wait. Move on it now. Right now, I understand not a lot of clients have $19,000 for their juveniles. Maybe it's a 10 pay, maybe it's a 20 pay, maybe it's paid age 65, maybe it's paid 100. We have that flexibility. So very much encourage you to look at that. We also have I'm going to skip by these. We have accumulation capabilities, leveraging that cash value growth. Use it for college, use it for retirement, whatever you want. Another solution that we see, because again, I'm wrapping up because I'm way over time. Apologies. Use the children's term rider on our term policy. There's nothing preventing you from doing that. The beauty of it, I know I'm going quick, is we can throw a guarantee, with it is essentially kind of a guaranteed insurability rider. If you put a children's term rider, we can convert that to a permanent policy. I know this is, why am I showing this slide? Because I'm showing you how affordable this is. $10 a month for all of your kids and future kids to be born. Plus have the ability to, when they to convert this to a permanent policy for themselves, up to 5 times the amount that we started with. So I know this is just a screenshot from a term policy with critical illness and return of premium riders, but $10 a month, regardless of your health. I love that idea. So I'm going to wrap it up here. What we do matters. Too often we talk about insurance every single day. I know my wife talks about how boring this life insurance and insurance must be, but it matters, and when those unfortunate things happen, it's not so boring anymore when you deliver those checks. I can't emphasize that enough. Don't become numb to it. A story that I talk about often is my daughter has been saving up money. This is a few years ago, and she ended up buying a skirt. Why am I wrapping up in this way? Right? She ended up buying this skirt, and she outgrew it 6 months later. And she was saving up. Now, we reference that all the time in our family. All right, hey, did you remember the value of $1, right? That's what we speak to it often. But I bring that into this because she recognizes it was a frivolous purchase. It's such a great lesson, but she outgrew it in 6 months. So many times we reference that skirt. When you are talking with your clients, talk about them outgrowing those clothes like that. The gift that the grandparents or your siblings for their kids or for clients' kids, give them a gift that's going to last a lifetime. Approach the conversation from one that really can bring about generational memories, can be there when they really need it. If you approach it the right way, these conversations can be won out of love instead of out of sales. And so, last thought, 35% of all of Assurity's permanent policies are in the juvenile space. There's a reason for that. We make it easy. Pricing is phenomenal. Love to have you look at that with us. So I'm going to throw it back to Mark here in just a second. I want to close out, but also think of any other questions. So Mark, any other thoughts?
Well, the first one that comes to mind is I'm not sure that we want to be encouraging grandparents to um, give life insurance policies only for Christmas. I mean, it's bad enough when they give you clothes that you're going to outgrow in 6 months.
Yeah.
We do need some more toys in this world. So, but yeah, I mean, the point's well taken, and
Yeah,
and
yeah,
I
yeah.
and I think one thing that is really important, particularly when we think about the products, the ideas that you have presented today, um, uh, because it's only good to do those for the advisors that are on this call to do those types of things, not only to help the people, but it really has to be easy. And I think Assurity has probably gone to great lengths to make it easy. And one of the things that makes this type of business easier, in addition to just the process being easy, is there's not a lot of exclusions. I mean, I know when people have or carriers have come out with products in the past and they say, well, you know, this is what it's for, and but it was so specific in what it was for that it seemed like it eliminated 95% of the problems that were out there that could have been solved, but because they didn't fit into the box. And I don't think Assurity is doing that. I mean,
Yeah.
there's very few um, exclusions. I mean, I think the only one you mentioned today was the pay or benefit rider, you know,
Yep.
has to be on parents and not grandparents.
Yep.
But that was the only thing, you know. So
Yeah.
I mean, I think that's fantastic.
Yep. Well, obviously we talked about a lot today. We talked about disability insurance and the need around, protecting your income. Talked about the foreign resident opportunities and those in the community that are underserved. We talked probably for too long about juvenile life, but it's funny how much of a 180 I've done in my career about the importance around it. But if you remember, we kicked off today talking about, at least for me, forgetting at least 50% of what I discuss in an hour. 70% lost by tomorrow, 90% forgotten by this
I
time next
already
week.
forgot that you said that.
Yeah, yeah. See, there you go. There's a saying I think that is a great quote around that, which is the brain does not care what was said. It cares what gets used. And so the final question I have for you, because I don't see any questions right now, I know we answered quite a few in the chat. Who is the client you thought of today? And please act on it by reaching out to the SMS team to make use of it, help that client, and to also make some money on the way. So, Mark, any other thoughts?
Well, just thank you very much for being here today, David. It was a great webinar. A lot of valuable information. If you're someone that is not contracted through SMS already, um, you can do it a couple ways. You can call our life department at 877-888-0166, and someone will help you get contracted with a surety, or you can go out to seniormarketsales.com and then click on the get contracted button. And then and if you're already with us, I mean, just call your marketer and they'll get you set up. So, thank you again, David. Be sure if you're on the call, you think of that one person that would apply to one of these ideas that David has talked about, and give us a ring, and we can help you out. So, until the June webinar, we'll just talk to you soon. All right. Thank you, everybody.